What's up, traders? Matt from the Trade Brigade here doing a technical analysis on our EV makers. So we've got Tesla, Lucid, NIO, as well as Rivian at the very end of the video. So if that all sounds good, left-hand side is the daily time frame, right-hand side is the 30-minute time frame. Let's jump right into it. Tesla is up first on the chopping block. So what you'll notice here from the daily perspective is that we are still well within the bounds of healthy bull flag consolidation. Let me just quickly take out our Fibonacci's from the low all the way up to the high, and what you'll notice is that your 38.2 has not even been tested yet. And traditionally, we look for anything that happens up here to constitute bull flag consolidation. This is nothing more than healthy price digestion, a little bit of a pullback, right? So that's what we've got from the daily perspective. Sure, we did get a breakdown of an important level. We'll discuss that on the 30 in just a second here, but I want to point out that, again, in terms of the most recent up move, it's nothing more than healthy pullback so far. It doesn't mean it can't turn into something more aggressive, but as of right now, we're still within the range, okay? So that's what we've got really here. I would also point out that we are resisting here, so do keep in mind it's a slightly nuanced lower high. So if we fail the 38.2, then I would probably just look for daily trend continuation, and we get the sense that this is obviously a bearish trend, right? Lower highs, lower lows. We would be looking for the next equal low, if not lower low, over the course of time if the bull flag fails, right? So that's what the daily chart is telling us. We're at the 200 SMA. It's not the most important moving average once you've touched it a number of times in close proximity, right? So here, that's when it was important because it was the first test that we were getting in quite some time. However, now that we've traded through it a number of times here, and we're right back at it, we don't really read into it too much, right? It's really, if you haven't tested it in quite some time and you're coming off, of a major high, that's really when you want to pay attention. But right now, it's not really what people are focusing on, right? This was the important one. Now that we're through it a couple times, not so important. So there's a little mini learning lesson to take away today. So that's the daily in a nutshell. Let's take a look now at the 30-minute and talk about some setups into Friday, tomorrow, the last day of the week. Here was a balance area, right? You can clearly get the sense that we had a big shelf of support even here, and we broke that into the afternoon. So no doubt about it, we are technically in a breakdown here that's got to be more bearish than bullish in the short term. So here's some things to pay attention to. Even if these hammers produce a bounce, it's all about the back test of the bottom end of the range, roughly 855, 850, depending on if you want to count some of these more recent lows in here. Anything that does this and rolls over, so if you start to see inverted hammers here, even bearish patterns on smaller time frames, 5-minute double top, 15-minute head and shoulders, whatever, anything that's bearish around here, look for short opportunities to continue this breakdown, right? We would have nothing more than a break, retest, and rollover for trend continuation. So that's one way to play it aggressively on a reversal pattern here if we get a move higher in the first place, or if you're not so sure about it, then look for the rollover, and when we take out the equal low, that's your signal for short. Now, what's the target going to be? Probably just to hear this 813.85. If you look at the structure on the way up, it was fairly poor. I would imagine we retrace that fairly quickly if we get that firm breakdown on the back test, and again, something that looks like that over the course of time. And also, let me also tie this in one last time. So Fibonacci's from the low up to the high. Where's that magic 38.2? Would you look at that, guys? I literally can't make this stuff up. Right to the low of where this breakout really stemmed from. 815 is the number, okay? So that's our downside in Tesla. The flip side of this coin is, can we produce a look below and fail, meaning that we get price acceptance back inside of the range and then rotate back up towards the top because the sellers have essentially failed to materialize underneath the bottom end. So if we can get a move that does this and then we hang out here, maybe put in a bull flag and then break out of that or start to break out of it, that's where I would start looking for that look below and fail scenario and start to target the top end of the range here at these upper wicks, right? So let's go ahead and put that level on. Let's grab the other tool. There we go. That's looking at roughly 886, 887, somewhere in that general area, right on the look below and fail to get back to the top of the range. So that's what we've got both up and downside into Friday for Tesla. Let's continue along here and talk about Lucid. So LCID is the ticker on that one. Let's clean up these fibs so we can talk about it in real time here. Zoom in a little bit more. This one had a prior daily balance here. Big move back to the top, so look below and fail, correct? That's almost like the equivalent of what we just saw on the Tesla 30-minute. You get the gist, right? That's how that pans out. But now we're right back down at these lows. So a 100% retracement has occurred. It's very rare that you just immediately smash through the low here on a 100% retracement in short proximity of time. So I'm not saying it has to be long, but I wouldn't be surprised if we get a little bit of dead cat bounce, and if we can produce a lower high, that's your short signal on a recross back through these levels, notably 2250, right? We'll take a look at that on the the 30-minute in just a second. So anything that stays down below here underneath 2560, the bottom of this prior daily range here, is bearish, right? Then we would look for a flush of these lows. If it wants to recapture and get back into 2560, I wouldn't immediately be looking for the long all the way back up to the top of the range. Generally, you want to see this happen once and kind of once only, right? You're not just going to get look above and fail, look below and fail over and over and over again without some other type of structure forming. So if it does move higher and produces something that looks like this, it's still a lower high, correct? So I'm not really that confident in upside here inside of Lucid. And even if we take a look at the 30-minute intraday time frame, I mean, look at this pattern from today's session. No doubt about it, a bear pennant, right? Bears, sellers fully in control here, and we can prove that with the Fibonacci's as well. If I come in from the high of day all the way down to the low of day, you can clearly see that the dead cat bounce only made it to the 38.2, a very technically nuanced level, right? Indicating that short-term sellers are kind of in control here. Bear flag consolidation, any flushes of the low of day, again, that's 2250, bring us at least to the panic low from when we gap down with the overseas tensions, if not lower. And after that, what do we have on the daily for supports underneath? I'm sort of looking at this area from in the past. Let's grab the other tool and try that one more time. Apologies for that. So here's that support. So anywhere between 1875 down to 1750. I know it's a little bit of a sloppy zone, but I'm looking at this double bottom from in the past, as well as this little shelf of support that really kicked off this entire move to the upside here. All right, so that's kind of what I'm thinking about, at least in terms of supports if this all starts to go. It's a fairly nasty move to the downside. I'm not saying we get there all over the course of one day, but those are just numbers, levels that I would have on my chart if this does start to pan out lower. All right, to the upside, if this is going to flip bullish, and again, I did fully concede that there could potentially be a dead cat bounce because of the fact that we've seen this 100% retracement here, you got to break the flag highs, okay? So instead of just leaving the fibs on there, those are pretty annoying on the eyes, but they're helpful in terms of finding the numbers sometimes. Just look at the structure here. If we can take out 2326, maybe there's a retracement, but only back up to today's high of day. I wouldn't really push your luck much further than that. That number, 2450s, okay? So a couple of things to watch out for. Anything that stays down here, bear flag consolidation, looking for follow through to the downside. Anything that breaks this, if you're a short-term scalper, I wouldn't fault you for taking the long back up towards today's high of day, but I wouldn't overstay your welcome, right? Just noting what we have going on here from the daily with all of this overhead supply, anything that sort of does this in the grand scheme of things is still bearish, right? So that's Lucid in a nutshell. Let's continue along here, get into our next company, which is going to be NIO for NIO. Let's zoom in on this one. Let's grab the other tool and try that again. There we go, looking a little bit better. What do we have here, right? So you could start to think of this in multiple ways. Here's an overall daily range. You can also see that we have resistance here coming from prior support, and you could call this a little H pattern, right? So to me, it's more bearish than bullish. Again, look at the daily bar as well. Took out the hammer low from the prior day. So if this was going to result in a bounce, it should have been long up and over the hammer high, stop under the low, targeting the move here. Didn't happen, obviously, and we closed weak underneath that low there on an increase in sell side volume. So the bears in control here as well inside of NIO. I would look for that full rotation into the panic low from last Thursday around 1850s. If we take a look at the 30-minute time frame, what's jumping off the page here? Well, a couple things, right? First of all, I would start to call this a really sloppy head and shoulders, right? You just get the sense that we have shoulder one, head, shoulder two, forming that really aggressive lower high here. As soon as we take out the neckline, which would have looked something like that, that confirms the new downtrend with the new lower low, and we're also getting that same sort of bearish pennant activity that we just saw on Lucid, right? So it's almost a mirror. Also, make pretend and extend this level to the left with me for a second. Notice how that was your support from in here as well. So if this breaks, there's really no structure that can support until, again, we get to that low, which we talked about as a target on the flush of this pattern here. The bear pennant panning out brings us into 1850s, all right? To the upside, if this is going to make a recovery, then just like in our Lucid, let's take out the fibs, we'll get a sense quickly where the 38.2 is. It's much higher above. So look at this, actually. Even more relative weakness here inside of NIO, noting that we never made it to the 38.2. You can see all of the consolidation was well underneath, a more bearish implication. I would just start to look for this structure here off to the left. And also, if I remove that, you'll notice it's the little wick that we saw on that miniature little bounce that happened in between bars. So like you could probably see it on a 5 or 15 minute chart, but nonetheless, this must be recaptured if there's even a chance that we get that similar trade which we discussed on Lucid back through this breakdown, right? And only go to the high of day. You don't really push your luck any further than that. So that's what we've got here inside of NIO. Let me just scrunch it up one last time. There was something else I wanted to mention here, but I can't remember. Now that I'm looking at it, of course, from the daily time frame, I apologize for the little bit of a mishap there, but from the daily time frame, if you're a longer term trader in NIO, if this is going to be a double bottom with the higher low, then your neckline is still up here and there's no action to take until we can recapture 23. And if that happens, maybe we get the move up to here, 25.69, 50 SMA could coincide for a super resistance. We'll see. Nothing about the chart right now would signify that that's a likely outcome, but it's something to think about and have in your back pocket. If there's some sort of nasty reversal that takes us here, we know that's a possible long entry for a move, as we just discussed, into 25.69 daily 50 SMA. That was the last thing here inside of NIO. Let's round out our EV makers, at least the big ones now, with RIVN for Rivian. What's going on here? We talked about this in the pre-market live stream today. Here is your range we've broken down, right? So, nothing about this is bullish. If we take the same sort of stance as what we were discussing on all of the ranges so far, anything that does this is a break retest. Look for rollover, any bearish patterns that happen towards today's high of day or at the low end of the range, basically 53. Let's take a look at the 30-minute time frame quickly. You can see multiple bear flags, one after another. You get the sense that this is a bear flag. We flush it on today's session. This is another bear flag. Anything that resists at these levels, so 53.35, 53 even from right around in here, is nothing more than a daily break and retest. Look for that rollover and continuation below. The only long trade I could see here is not even a move into that 53.35. It's not even the move for here. It's if we can break this level right here at 55, maybe there's some retracement through this thin structure back here, and then the gap overhead. That's the only reason why I could see a long trade developing inside of Rivian, to play for this gap overhead. And just to give you an idea of what those numbers are, that's going to be roughly 59.20 up to 60.80 on the upside. If we take out 55, maybe the move is here and then a gap fill after that. Again, nothing about the chart right now with these bearish closes, relative weakness, consolidation at the lows. Nothing about that would suggest this, but if for some freak accident reason there's a break of 55, that's what we're looking for to the upside. Instead, as I've pointed out earlier a number of times here on the daily, break and retest, looking for any reason to get short on the back test of 53.35, or even if it goes a little bit higher into the range and then falls back out, another bearish trade there. If you're more conservative, look for a breakdown of today's low, which is roughly $50 even for just trend continuation, and all of this to then turn into overhead supply, leading to some more selling pressure, okay? So those are our electronic vehicle makers in a nutshell. If there's anyone I'm missing here who is like, a decent name to trade with enough liquidity, let me know in the comments section. We can add them for the next go around here. If you enjoyed the video or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.